Welcome to the Stage Analysis Members Weekend video. I'm going to do the content in a different order this weekend, as there's been some changes in the key market breadth data, which I personally think is the most important part of the stage analysis method. It's very much underrated and underused by many people. Most people only focus on the stages of the indexes or the individual stocks, but the key aspect of the stage analysis method is obviously using the strategies of the weight of evidence approach that we get from looking at the multiple market breadth indicators, as they are leading indicators of what's going on in the market and a way to actually do stage analysis without even looking at a chart. So I'm going to start with the market breadth data, then move on to the industry bell curve, look at the industry group RS rankings, what's going on in the major indexes, and then finish off with having a look through some of the week's watch list stocks, as there was a few group themes going on, but some of those will come up in the industry group RS rankings as well. So as I said, I want to start tonight by looking at what's going on in the market breadth data. So we've got this is the percentage of stocks above their 50-day, 150-day and 200-day moving averages combined chart. So this is something that I do each week. It's a custom chart by combining the data from if I scroll down here, you can see I combine the data from the NYSE chart. So we've got the 200-day, the 150-day and the 50-day. So I get the data from these charts in the NYSE and the same charts again from the NASDAQ. And we combine all of that data into a spreadsheet here, and then determine what the overall average is, and then plot it on this chart. So for me, this is a really useful chart for both market timing and for strategy. So how it works for anyone that's watching this for the first time is that we've got this red 50-day moving average of it here, and you've got the dotted grey 20-day moving average. So that's when it's above the 50-day moving average, it's considered potentially in a positive environment. So from April 2020, for example, all the way through to January, February time in 2021, the vast majority of the time, as you can see here, it was above the 50-day moving average, with only a few dips below here. So it was in a positive environment, and when it's below this 50-day moving average and it's declining, it's in what we call a difficult environment. Not necessarily negative, but a difficult environment. So it favors more the short side, and breakouts tend to fail. So as you can see, from February, March 2021 all the way through to around May this year, it was deeply below that 50-day moving average for the vast majority of the time. And then we started to get that move out in June, July, August time here, with the first move back above it strongly. We've had a few other dips above initially earlier in the year, but that was the first strong move. We had some decent moves from stocks, and now we've had a secondary move back above it again now. So we did move into a positive environment. But another way that I use this is when it's below the 20-day and it's still above the 50-day, is I consider it a neutral environment. So currently, as we've dipped back below the 20-day moving average here, if I zoom in on this, as you can see here, this is the 20-day. So it dipped back below that, so we're now in a neutral environment as we're above the 50-day moving average still. But currently, as you can see from this, we're at 44.44%. So this is also a way of doing stage analysis. When you're in the 0 to 40% range, you're in the stage 4 zone. When you're in the 40 to 60% range, you're in the stage 1 or stage 3 zone. And when you're in the 60 to 100% range, you're in the stage 2 zone. So at the moment, we're in the stage 1 zone, as we've come from the lower end, we've come from stage 4, so we've moved into the stage 1 zone, and we're holding around there at the moment and back testing. So we've considered currently a neutral environment in the stage 1 zone, and in the post I go through that in a bit more detail. And also another way of looking at this is using the point and figure chart, which gives us whether to be on offense or defense based on the column position. So it's very similar to what Dorsey does with the Bullish Percent index. So when you're in a column of X's, you're on offense, and when you're in a column of O's, you're on defense. So we reversed this week back to a column of O's on Monday, and then on Tuesday I think, and then on Wednesday we followed through for a further 0. So basically, or O, and we're back down to 44% here. So we've reversed from a bull confirmed status that we were on back from in October time. So we reversed up to bull alert back in October, and then went to bull confirmed yeah, I think it was around the 20 something of October to bull confirmed, and we've now reversed back to what's called bull correction status. So we're on defense and we're on bull correction status based on the point and figure chart. So as I said, if we scroll down here a little bit more, you can see the dip below the 20-day moving average here. So this column here is the percent above the 20-day, and this column is the percent above the 50-day moving average. So you can see when both of these are green, you're in a positive environment, and when both of these are red, you're in a difficult environment. So at the moment, we've got a mixed bag. We've got below the 20-day, but above the 50-day. So we're in a neutral environment currently, and we dipped off minus 10.19% on the week. But we have had a strong move over the last 6 weeks or so where it gained around 30% or so. So far, looking at the overall average, obviously the pullback is still relatively minor so far, but obviously could get worse. Obviously no guarantees of that. I also always post in the members post here some playbook ideas based on the position, so you can go through that at your leisure, and the individual charts for the NYSE and the NASDAQ. So again, go through those in your own time. Don't want to take up too much time in the video here. So moving on, we've got the NASDAQ percentage of stocks above their 20-day moving average here. This is the NASDAQ composite, not the NASDAQ 100. We flip to the NASDAQ 100. So here you can see it's much higher at 56% currently, but still has come off out of the upper zone. So when you drop out of the upper zone, start to push lower, we've got lower lows below that, so we've moved on to a negative signal on this in the short term here. NASDAQ also doing similar things, making lower lows and lower highs down here after rolling over. So we're in a more negative signal at the moment on these. Same with the NYSE, down to 42% now, pushing down towards approaching the lower zone again now. Small caps 33.5, also pushing towards the lower zone again, and the S&P 500 is making another lower low here, so 47.8% at the moment. So still in the mid-range currently in the S&P 500% of stocks above their 20-day EMA, but obviously we've come out of this upper range, which when you're in a bullish run environment, it tends to hold up in there. So you get the odd dip below, but it tends to recover quickly. So now that we've been below for a good 4 days or so, now we've potentially moved on to a negative signal for that too. We look at the Bullish Percent Index intraday chart here. This is another way that I look at the data. So we've got a 30-bar moving average on this and a 10-bar moving average on the top one. So this is the NASDAQ at the top and the NYSE at the bottom. So we do a combined chart again for these. So when it's below the 30-bar moving average on both, you're in a difficult environment, and when it's above, you're in a more positive environment. So good for short-term swings, works really well, similar to the 5-day moving average on the S&P 500, but this gives a much clearer picture, and it's an equal weighted way of doing it, and you're looking at the whole market, thousands and thousands of stocks obviously covered by this. So you can see at the moment we're at 40.08% in the NASDAQ there, and 53.17% in the NYSE. But what we have had here is a little bit of a double top in both of these, which we haven't seen for a while. So looking a little bit more negative in the short term for these. If we look at the data on a longer term chart, so this is the NYSE Bullish Percent Index, you can see it's pulling back, but we have had a really strong move off of out of the lower range. So once we move up through the 30% level, that's our initial area to get more interested again. So we've had a strong move up back above the mid range here, so a good breadth thrust here through to the mid zone. So at 51.68% currently, so still in the upper mid range. Look at it on the point and figure chart, which is the main chart for the Bullish Percent Index. Above 70% is your oversold level, and below 30% is your overbought, other way, overbought level at the bottom, oversold at the top. So when we reverse to a column of X's, as with the point and figure chart earlier on the moving average breadth, this moves it to a bull correction status. So we've been on bull confirmed for a while, again for a couple of months on this one. So reversing back to bull correction status at the moment. So same with the NASDAQ is not quite yet. It's not as strong as the NYSE. It's not made it quite so far. It's only at 40.08%. Again, reversing back, so we haven't had that same kind of move as in the NYSE. You see the length of the move in the NYSE compared to the NASDAQ. It's only had a small move up. So by far much less bullish in this one. Still consolidating the majority of the year range, really. If we look at it on the point and figure chart, it is still on a bull confirmed status, though hasn't yet reversed to a column of O's, but it is much weaker in terms of it's only at 40% compared to the 50, what we got there, 51.67% in the NYSE. So another one to look at, which is a bit more short term in nature. So when it gets above the 70% level with the bullish percent indexes, reversals back below again, and when you get your signals to the downside again. So we did close the week back below the 70% level here. So we've got a potential bearish signal going on here, but you can see with the S&P 500, because it's only 500 stocks, it's a lot more whippy. It goes up and down below that level a lot more than you see with the NYSE and the Nasdaq Composite. So this one I don't use as much personally, but in the short term, obviously this year, as you can see on the point and figure chart here, it's been good for short-term tops. For example, back in 4 means April, so reverse back to a column of O's in April here, or 8 means August, so reverse back to that column of O's there back in August, and we've now come down in December. C is December, so we moved below the 70% level this week on Friday. So with that, so it's moved on to a bearish signal at the moment. We're on bear alert status at the moment, but obviously that's not bear confirmed yet. So bear alert, it would need to drop below the line here at the moment, make a further 5 O's in order to move to bear confirmed currently, or reverse back up and make a higher low and then reverse back down again. But at the moment it needs to move below the 58% level currently in order to move to bear confirmed status. But obviously a warning sign here. As you can see, obviously we've had multiple reversals this year, as I said, below that 70% level in January, April and August, each of which were near-term tops at the time. So definitely potential for a swing high and move lower here, but it is not confirmed yet. Nasdaq NYSE advanced decline line. So this one, the signals on this we use are about moving above the 50-day moving average. So when it's above, it's in a more positive, and when it's below, it's in a more negative. So simply at the moment, it's pulling back, but it's still above that 50-day moving average. If we look at the Nasdaq, you can see it's actually moved back below its 50-day moving average, never managed to move much out again. So this one is still on a neutral, slightly negative signal on that one. If we look at the momentum oscillator of the advanced decline data for each, so the Nasdaq at the top here and the NYSE at the bottom. So this is the short-term momentum oscillator, a momentum index. So using the 10-day moving average. So the traditional momentum index uses the 200-day moving average. So basically, when it's above the zero line, you're in a more positive environment, and when you're below, you're in a more negative environment. So as you can see, we're making lower lows below the zero line currently, with obviously this week's move in the NYSE back below the zero line. It managed to hold, but the Nasdaq had been popping below a few times. So again, NYSE has been showing more strength in the near term, but they've both turned a little bit more negative now again. Look at the McClellan oscillators, which show the same kind of data using the EMAs instead. So both have moved into negative territory in the near term now again. So as you can see, minus 20 down here on the Nasdaq at the top, and minus 33 on the NYSE. Right, where are we? Right, exponential 10 and 30 week day moving averages. I don't want to say week there, need to change that. So this uses the 10 and 30 day exponential moving averages of the advanced decline data, and basically all we're looking for in these is the crossovers, so negative crossover and positive crossovers. So at the moment NYSE remains on a positive crossover, so that was on a favorable signal currently still, and the Nasdaq is crossed over negatively again. It's crisscrossed for multiple weeks now, so it's been pretty much going sideways, but that one still remains on a neutral / negative signal at the moment. New high, new low data. This is the NYSE, so you've got 63 new lows and 43 on Friday in the NYSE, but the Nasdaq, still the new lows continue to dominate here, and we actually made a higher peak again, which it had been going the other way for the majority of the time. We did have a little higher peak here as well, so it could obviously come off still again, but obviously we did have a trend down, so we've actually started to pick up again here in the Nasdaq, which is not good to see, as obviously on the combined chart that will push it even further down. So if we look at the go back one. we look at the cumulative line. Actually, let's look at the 5-day average first. So the 5-day average all this year, since back here in November, we've been basically on a negative. We've had a few pops above the 0 line. It started to turn a little bit more positive again back in August time, back in March, April, was it April? Early April there. Tried to move into it right at the start of January, but as you can see, this recent move hasn't yet turned it positive, didn't manage to make above the 0 line, so staying on a negative theme for this currently. The cumulative shows it very, very clearly. So the crossovers, this has got a 50-day moving average on it, so crossovers above and below is the signals that I use on these ones. So December 2021, it turned onto a negative. We've been in a stage 4 environment ever since, and not even got anywhere near that 50-day moving average. So overall US market remains in this obviously negative status at the moment, and still obviously a long way to go for this to cross. We need to see moving averages start to flatten out and this starting to turn back up, and then that would be a potential long-term signal if it does, but obviously it isn't there yet. You can break this data down though into the different segments, so the NYSE, the NASDAQ, and S&P 1500 or 500. So I find it very useful to see what's going on, as there are obviously very different types of stocks in the NYSE versus the NASDAQ, for example. So as you can see with the NYSE here, we're actually still above the 2020 levels here. So if I actually push this out a little bit more to 4 years, you'll see this a little bit better. So you can see it's had a deep decline, but from the 2021 all the way through to obviously where it started to cross under in December 2021 there, it's managed to hold up a little bit compared to that. It hasn't retraced the entire move, or it has retraced quite a lot of it. Had a few dips above the 0 line there, but you can see it's actually getting closer to its 50-day moving average here. If we look at the NASDAQ on the other hand, though, I've actually zoomed this out to 4 years as well. You can see this, on the other hand, has massively undercut that 2020 move. So more than pretty much doubled it now. So it's had an extreme move to the downside. And again, this dropped late November in the NASDAQ. I mean, it was already crossing over a few times earlier in the year, back as early as August, to the downside. So the NASDAQ was giving some early hints that there was obviously a lot of weakness going on there. And obviously had that final little push before rolling over completely. So this remains a long way below its 50-day moving average there. So the NASDAQ remains very, very negative there. Whereas the S&P 1500 on the other hand, again, if we zoom out to that 4-year time frame there, you can see this hasn't pulled back anywhere near as much. So we just saw the NASDAQ had more than doubled and was all the way down here somewhere, whereas the S&P 1500 has held up very well. You can see actually got multiple new high, cumulative new high looks on here, and the recent behavior has actually made it so it's managed to cross back up to the upside on its 50-day moving average. So you can see if we zoom in a little bit, it's still above the 50-day moving average at the moment. So it's tentatively, I say tentatively, on a positive signal currently. So we need to see this continue to develop, and the 50-day moving average to obviously continue to turn and flatten out and start to turn up with it. So if that happens, then obviously that would be very bullish for these stocks, the more large caps, and obviously the S&P 400 and the S&P 600 mid and small caps. This covers. So you can see it's been a much stronger area of the market than obviously the broader NASDAQ especially, and the NYSE, but the NASDAQ is by far the weaker part of the market still, and continues to be so. So obviously not the place to be currently based on this data. If we look at the cumulative point of figure breakouts minus breakdowns in the US market, so again this covers the entire US market, so as much as we can from the scans that I run each day. So this is a custom chart that I do myself. So this is made from the point of figure double top breakouts. So basically a double top breakout is basically, when a point of figure chart, you have a column of X's, you have a column of O's, basically going the other way, and then when you get you basically make a high on you make a double top breakout. I'm doing it wrong there. Do that one. You make a high on here. Basically, the column of X's. I'll do it again. Got your column of X's. You've got your column of O's. you start to reverse and make a higher high here. So that's what we call that's a double top breakout. And the opposite, the other way, if it goes back to column of O's, goes around here and then goes that way, and you actually make a lower low down here, that's a double bottom breakdown. So it's very, very simple in how it does. It's an equal weighted way of doing things. So, and as you can see from the chart, it gives us a very good proxy of what's going on in the market. You can see all of last year through 2021, it was basically going sideways for the majority of the year, and then started to break down into stage 4 type environment back in November time, early December time. We've been in stage 4 for the majority of the year here, and started to only recently cross back to the upside above its 20-day and 50-day moving average here. It's pulled back into the 20-day moving average this week, so if it does start to cross to the downside again, then that would turn it a little bit more neutral again, as it's still above the 50-day. As you can see at the moment, again, this is tentatively positive at the moment. However, another way of looking at the same data is to use its distance above its own 20-day moving average. So the 20-day moving average is this red line through here. So on this next following chart, this line has been flattened to make this 0 line here. So the 0 line is the 20-day moving average, and this line here is the cumulative point and figure breakouts minus breakdowns. It's done as an oscillator, and then a moving average applied to that. So the signals I use on this one are the crosses to the upside and the downside. So as you can see at the moment, we've been on a negative signal now for a week or two. So in last week's video I highlighted this had turned slightly negative, but obviously it needed more time to develop to see if it was fully negative or not. So obviously now made some lower lows, so and it's starting to get back towards the 0 line here, so it has turned more negative in the near term. Again, another way of looking at this data is to use the momentum index approach. So we've got the 10-day moving average, the 20-day moving average, the 50 and the 200-day. So what I have noticed recently is this change of behavior in the 200-day moving average. As you can see down the bottom here, this is potentially making a turn, which we haven't seen obviously throughout this entire time, since all the way back, we got that here, since January, no, what's my date there? Oh, August 2021 there, where it topped out. I think that is August 2021. No, 1st of the 8th, January 2021. Sorry, getting mixed up with the American and the UK way of doing dates there. So January 2021, this peaked and has been obviously sliding ever since. So back in October time, we actually got a strong reversal move. That's the first reversal move that we've had, obviously, in close to 2 years. So definitely a bit of a change of behavior going on down here. You can see on the shorter term measures, they actually managed to get back above their 0 lines, and the 50 days actually managed to get back above the 0 line again now too. So definitely a little bit of a change of behavior going on with these. So breadth at the moment is very mixed. We've got what we say in terms of the stage analysis method is we use the weight of evidence approach. So as you can see from all of the charts that I've posted, you can look at obviously many more and get a much broader picture. I use these as my core charts, but there are obviously lots of other ways of looking at the data too. And so Stan's famous for looking at 50 to 100 different indicators for his market breadth data. So at the moment, I would say we're in a very neutral position currently. So definitely need to see more data coming in, whether we get any actual directional moves. Right, moving on.